This is the K-State Radio Network, and you're listening to Agriculture Today. This Friday edition gets going with a glance to the grain markets, and standing by, as always, grain market economist Dan O'Brien, K-State Research and Extension. We've again loads to discuss here, Dan, but let's start with the lead dog in the markets this week, and that would be the wheat trade. Multiple factors are coalescing here, to put it that way, to lend strength to this trade.
Yes, in spite of a weak export performance, which is probably going to cause the USDA to have to make adjustments that in a normal situation would be viewed bearish on the supply demand balance sheet. This will be in the next WASDE report coming out next Thursday on the 12th. In spite of that, the news on the production side here in the U.S. and also overseas in India are both, those things both together are working together to provide all that much more support for wheat. And we've seen it the last couple of days in the wheat market. We were up 30 some cents on 2 days ago, and here yesterday closed up, May, which is going off the board, closed at 53. July, now effectively the lead contract, up 53 3/4 cents. So strong performance in the wheat markets. And when we look at the percent of winter wheat area that's in drought, comes to about 69%. So in essence, soft red winter in the Eastern Corn Belt, not affected, but hard red winter, white winter wheat, both affected sharply by this situation that we're in. And we're just in a situation, we're in a circumstance where news out of India that they have, after 5 years, strong crops, now they're dry and are basically coming to the market making reassuring statements that no, we're not going to cut off exports. And in a normal year, maybe that wouldn't be that much of a deal, but with real questions about what we'll be able to get out of Ukraine in terms of exportable wheat supplies, and that combined with worries about where we'll end up out of our hard red winter wheat and white winter wheat crops. You bring those things together, and the wheat market, it's gone up 80 cents in the last couple complete days. So what a situation. I would say cash prices for wheat, there's not almost every bid in the 6 areas that we follow in the state are all at or above $11. Strongest bids at Salina, again, export oriented, about $11.50 in terms of the spot price. On the low side, we're at $10.87 in Southeast Kansas, and everything else is above 11 at the major terminals that we're looking at. New crop bids, and then that's an issue now. We're close enough to harvest that we can probably, and some areas have got enough rain and moisture that they feel pretty decent about it. New crop bids, interesting, again, Saline area, 1170. The new crop bid's higher than the spot bid. Topeka, the spot bid, new crop bid are the same, 1152. And again, you go to Hutchinson, South Central, again, 1115 new crop bid there in June, July, and we're at 1109 now. So at those export-oriented areas, export terminals, strong new crop bids, they're sending the signal that they're really wanting to secure supplies to do whatever export business they can in coming months.
Before we move on from wheat, Dan, we're 2 weeks out from the Wheat Quality Council's 2022 Hard Winter Wheat Tour, which will take in what's going on with the Kansas crop. That's going to be perhaps even more market moving than normal, it would seem.
Well, certainly seems that way. Again, the shortfalls that are being reported out of these, I guess that as groups have met in Texas and Oklahoma in the last week are pretty startling. Again, somewhere around 50 million, 55 or so out of Oklahoma. They'd had over 100 million last year. And Texas being tough and really short also, it really puts the onus of the impetus on whatever can come out of Kansas to make up some of that difference. And again, recent rains we've had may help a bunch, but you look at the drought monitor maps, and still the southwest corner of the state still has areas that don't look very good. So perhaps we'll be blessed and get the recent rainfall will don't want to say bail us out, but it will help enough to not have the worst case scenarios come. Again, how much damage has that crop already suffered? How many tillers are there to be able to respond? How much subsoil is there to help bring that thing to the end? We turn hot again with stress on a crop that was already just barely hanging on out to the west. And where do you go? Yeah. So quite the situation.
On the corn side then, once more, favorable factors coming together here. And we see a surge in corn exports coupled with worries about planting delays in the Corn Belt this week.
You know, you stand back and look at that and try to get the big picture. And the second corn crop in Brazil has suffered enough from dry conditions that you have private analysts coming in with numbers that are about 10 million metric tons below the USDA's projection of 114. And you know, if the dry conditions continue, it could get worse. So you have that combined with excess moisture, delayed planting in parts of the U.S. Corn Belt, particularly northern plains, and you just have worries coming into the market. You and I talked about this before we came on air, but when you look at the new crop November soybeans at 1491 and 3/4 on yesterday's close, and D's corn at 738. Look at that ratio. It's 2.02. So in these areas where we have delayed planting of corn, it's going to make it all that much easier to possibly look at the strong soybean prices and say, well, hey, if I can't plant this, that's still there. But by the ratio of November beans to D's corn, that the market is trying to encourage people to plant corn. But still, if there's any hiccup, there's not a lot lost financially with the prices that we're seeing for soybeans to go that way too. So I think that's some of what's being wrestled with right now. And that set of dry conditions down in South America helped to lead to exports for the week ending April 28th of about 75 million bushels for that week. And so we're sitting at shipments and purchases of about just under 2.3 billion bushels. USDA's projections for 2.5 for this marketing year. And so that's about 92% of the way the USDA's projection. We're only about 65% of the way through the marketing year. Again, coming back and having to ask the question, will the USDA with this see this pace of corn exports and raise that 2.5 billion projection that they've got and cut down the estimate of ending stocks we have for this old crop marketing year and raise the stakes for the new one. I should say, by the way, in this May 12th report, that we will be seeing the USDA's first WASD estimate for the 2022-23 marketing year. And again, we may get whatever we get, but if the more we cut down those ending stocks out of this old crop marketing year, the smaller the beginning stocks are, and the more pressure is on trying to avoid having a type of a shortfall in the U.S. crop this summer. And again, it just adds to the prospects for volatile markets that we would see coming through the summer.
And as you referred, soybean market motoring right along, exports moving briskly, reliably. And so
I forgot to mention also grain sorghum also had pretty good week export wise as well. And for soybeans, we had about a so-so week in terms of actual shipments of exports for soybeans, about just under 21 million bushels. That's just about essentially equal to what we need to meet the USDA's projection. But the forward purchases are what catch your eye. So the actual sales and forward purchases for this current marketing year ending August 31st is about 2.14 some 2.143 billion bushels, and the USDA projected 2.11. So we already have shipments and forward purchases over what the USDA is projected, and probably going to lead to again raising the export number that the USDA has, and lowering ending stocks for the old crop year. But we also have already seen purchases of about 410 million bushels in the next marketing year. So we're and that's about 19% of the USDA's projection that they had coming out of the Ag Outlook conference. So anyway, I guess hard to mask my concern about how these numbers are working out and where they take us this summer as we are balancing pretty strong demand for U.S. corn, grain, sorghum, soybeans with any hint of production problems we may have here. So here in this country in coming months, and it just would seem that we're set up to have a lot of support for grain prices, at least until the time we get in the middle of the summer. And when we normally see prices start to decline into harvest, I don't know that we'll see that decline this year. I think there's so many concerns overseas that if you were, as you analyze it, looks like we're going to hold up pretty strong even through the end of the summer, just because there aren't the other crops that are coming in quantity to fill that gap. So we're in an interesting situation here in this 2022 grain market heading into 23, and we'll see by the time we get to harvest where we're standing at that time,
with the appropriate amount of volatility sprinkled in amongst all of it. Dan has notes on the markets worth your review. Producers at agmanager.info. He posts those weekly. Check those out. Again, we'll talk next Friday, Dan. Thank you.
Thanks, Eric. Take care.
Grain market analysis and comment there from Dan O'Brien, grain market economist, K-State Research and Extension, along with this from his office in Colby, Northwest Kansas. We'll be back with more for you on this Agriculture Today.